is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril Hong in Singapore. Your top stories this hour. Asian investors assessing an accelerating rotation on Wall Street as money shifts from big tech to small caps. Wells Fargo leading declines in U.S. banks amid worries about President Trump's populist pivot. Japan's ruling party confirms Prime Minister Takaichi will call a snap election seeking to secure a mandate for her new coalition. Also ahead, Denmark warns of fundamental disagreement with the Trump administration over Greenland after high-level talks in Washington. And we speak exclusively with the CEO of Hong Kong-listed BeOne as China's pharmaceutical sector surges. Now, that's among the sectors we are watching, healthcare-related stocks amid this rotation in Asia following what we saw on Wall Street overnight. And this is following on from a string of gains in Japan stocks. It's about the Takaichi trade. We're hearing from some of these LDP, the coalition officials. They seem to be confirming we are going to see an early election. And then not just the moves in stocks, but look at FX as well. Given the weakness in both the Korean won and the Japanese yen, we heard from Ueda sounding hawkish. We've also been hearing from the Treasury Secretary of the U.S., Scott Bessent. He seems to not want to see these excessive volatility in the FX space. And he also talked about how when the weakness of the won comes through, it's not in line with fundamentals. We have a BOK decision due today with growth firm, with the weakness of the won expected to stand pat, the Korean Central Bank, Paul.
Right, let's take a look at how U.S. futures are tracking. It was another interesting day for U.S. markets. The tech rotation becoming a real story. You see there on the chart on your right of your screen, the Nasdaq falling down the most almost in a month, and is now being outpaced by the Russell, the small caps index, which had a pretty good day. We had more bank earnings. Citi fourth quarter results beat estimates. Shares slipped after hours, though a bit of concern about progress there on meeting regulatory requirements and also the progress on cutting costs. The CEO, Jane Fraser, also had some remarks on President Trump's proposed cap on credit card fees, worried that it might trigger a broader economic slowdown. Wells Fargo missed on severance costs. Bank of America had a beat, though. Equity traders there having their best fourth quarter ever. But yeah, the small cap story, a big one of the day. You see a bright spot there, up 0.7%. Avril.
Let's bring in our executive editor on markets now, Paul Dobson, for an analysis and a look ahead for the Asia session. So, Paul, rotation, is that the trade for January?
It certainly feels like in the US market, at least, there's quite a lot of momentum behind this. As Paul was saying, the small caps gaining, and indeed the majority of the S&P gaining, but the big tech names having some of the momentum knocked out of them a little bit. And I think also rotation from the US into the rest of the world is a theme we've been talking about this week with strong Asian outperformance too. So it does feel like people are thinking at the start of this year, maybe those tech names in the US, which have had an extraordinary run, are kind of done. And if you look at where the Nasdaq has been over the last 3 months, it's kind of in a range, not going up any further. And people looking for the next sort of juicy rally will be thinking, well, either we spread out and have a look at the more value sectors in the US market, or we look at the Asian tech sector, which still looks pretty hot by comparison. And so that's where the flow seems to be going at the moment.
Yeah, and Paul, I guess markets shouldn't be expecting a catalyst anytime soon from Fed easing. It looks like, well, they're in no hurry to start cutting rates again. We heard from Raphael Bostic. Let's take a quick listen.
Inflation is too high, and we need to do all that we must in order to get it back to 2%. We've made great progress, but we still have a lot of distance to go. And the economy has been remarkably resilient. So we see record profits across the board.
Yes, so no rush to cut. Is the picture any different for 2026? And sort of on a side note, looks like Fed independence is alive and well.
Well, there's definitely what we heard from a bunch of the Fed speakers in the US day was that sort of defense of the Fed's independence, sort of all gathering around the comments that we had from Powell at the start of the week, sort of pushing back against the U.S. investigation into the property development. But that aside, I think, let's concentrate on the economy and the economics. Bostic there talking about the strength in the economy, and he's not wrong. It's a very rosy picture over there in the U.S. at the moment. The stuff that we heard overnight, we had retail sales looking okay. We had the beige book turning a little bit more optimistic as well. And you can see it and you can feel it at the moment, and that's why markets have been looking buoyant, and that's why people are happy, spreading their bets a little bit more around the rest of their equities market at the moment. It does mean, maybe the Fed isn't going to be in a hurry to cut, but we knew that already. The market is priced for 2 cuts this year, for 1 in the first half, 1 in the second half. It doesn't seem to need to change that view right now. That will depend to a certain extent on what Trump does with the new Fed chair. And then, as some of the Fed speakers were talking about yesterday, whether the new Fed chair can corral them, can convince them that lower interest rates is the way to go. And for that to happen, you do need more benign inflation. And that's the thing that Bostic, for example, was emphasizing is still one of the concerns from the policymakers at the moment.
With that in mind, Paul, is it becoming more difficult to be a dollar bear?
I think it's a good question, and the dollar has seen a bit of a surprise rebound at the start of this year on a sort of broad basis, when maybe people were looking for more weakness this year. Against Asian currencies, that's been particularly salient. Of course, we had the yen pushing towards 160 on the weak side. The prospects for an election there not helping the currency, because the view is that if Takaichi goes too far in terms of spending, then it will upset the bond market some more. And then a Korean won has been doing a similar thing, and so we heard this intervention comments from the US side overnight, talking about not wanting to see excessive volatility, and so that's put a little bit of a brake on it. But there are reasons why people are interested in the dollar, and it's gaining a little bit of ground, at least against other currencies. It's a different matter when you talk about silver or gold, which of course are tearing higher against everything else at the moment.
Paul, you mentioned those US remarks on the won, and this was some comments from Treasury Secretary Scott Bessent saying, look, the won does not reflect Korea's fundamentals. We have a copy of that tweet that we can put on the screen for you there. It's pretty unusual, really, for a foreign Treasury Secretary to weigh in on the currency of another country, but this is familiar ground in some ways for Scott Bessent. How durable is the floor that he's put under the won going to be?
I think what he's saying in these comments, and also the comments that he talked about the yen this week after meeting with both of the Treasury Secretaries for the respective nations, is hey, if you need to intervene to stop this rot, then that's okay with me. If you think that the currency is going too far and you need to do a little bit more to tap on the brakes, you have the green light from the US to go ahead and do that. Now, for the yen, at least, we're not quite setting the sort of markers where you would normally expect them to intervene when I'm talking about the pace of the declines of the currency and the outright levels. But we are getting closer to where they may feel the need to, send the market a warning signal, and Bessent has sort of given tacit approval there. And likewise on the Korean won, which we've already seen ratcheting up at the end of last year of rhetoric of moves from the administration to try to stop the rot. Now that they have the US's tacit approval, we might hear some more saber rattling on their side as well.
You talk about the won. I mean, it's interesting. South Korea and Japan, what they seem to have in common for slightly different reasons is the strength of their stock markets and the weakness in their currencies. Yeah. What is the risk of reversal given valuation? You've got earnings coming up as well. And how does that play into the stock market trajectory of these markets?
Yeah, and it's interesting. I don't really know if the moves in the two are linked or just coincidental, but they're very strong trends in both cases. So yes, a weaker yen should be supported for the equities market, a weaker won, maybe for the Korean exporters as well, to a certain extent. When it goes too far, it starts to become damaging even then. But I think that if we do see a big reversal in the currency market, then that would put a little bit more caution into the stocks as well. And in any case, the Kospi, which we know has been on a very strong tear, the the Japanese stock market as well, do have good reasons for people to be optimistic about their gains. We have the tech story, but we also have government efforts to try to improve corporate governance, a bit more of a long-term, not very sexy, but very important story that's helping those valuations lift as well. So there is still momentum behind the companies, but whether, the turbulence that we might get in the FX market gives people a bit of a cause to take a breather here, we'll have to wait and see.
All right, Bloomberg Executive Editor for Asia Markets, Paul Dobson there. And Avril, of course, one of the reasons we've seen yen weakness is all the speculation swirling about potential for snap election in Japan. And we've got some more details on that. According to Ishun, the Japan Innovation Party, which governs in coalition with the LDP, it's understood that Sanai Takaichi will recall Parliament on January the 23rd, or Parliament will reconvene then. And shortly after that, she will announce the dissolution of Parliament and call a snap election. The LDP Secretary General has also said Sanai Takaichi will give more details on her plan at a press conference on January the 19th. But yeah, she's really seeking to capitalise here on her strong personal popularity, 62% approval rating in the latest NHK poll, but the LDP that she leads, just 32%. So a bit of a risk here to see whether her personal popularity is going to convert more broadly.
And risk as well, because this is an untested dynamic with this new ruling coalition, given how it's going to be the first time in, 2 decades without its former junior coalition partner, Komeito. So that's another thing that could add to this gamble that, it could unravel without this ally. Certainly, though, the risk may be turning into opportunity for Takaichi. Maybe that's the calculus for her. Maybe the opportunity too hard to pass on in terms of being able to restore this comfortable majority in Parliament's lower house and then show that she can not only stay on as Prime Minister for months, but years, given this revolving door we've been seeing in the past couple of years in Japanese politics. Now, coming up on the Asia trade, we have lots ahead. Our exclusive interview with BeOne Medicine CEO John Oyler on China's hot biotech sector, live from the JP Morgan Healthcare Conference. Plus, we talk market strategy with BNP Paribas and hear why Goldman Sachs sees a K-shaped recovery in Korea, Taiwan, and Vietnam. Much more ahead. This is Bloomberg. Prime Minister Mark Carney has arrived in China on the first state visit by a Canadian leader in 8 years. He'll meet Premier Li today ahead of Friday talks with President Xi. Our Chief North Asia correspondent Stephen Angle joins us from Shanghai on this. So, Stephen, Carney in China, what's at stake?
Well, a lot's at stake, obviously. A number of world leaders, and we'll get to that in just a minute, are coming to Beijing and China in general over the next few months, or next few weeks, in fact, including Mark Carney. We all know what happened since April of last year, the barrage from the Trump administration of tariffs against a number of trading partners, including China, including Canada as well. And Mark Carney has said he wants to double non-U.S. exports of Canadian goods over the next decade. We do have a quote graphic on that to see what he was saying ahead of this trip to China, to Beijing, where he landed yesterday. As you rightfully said, he's going to be meeting with the Premier Li Qiang today, then the big guy himself, Xi Jinping, tomorrow. You're right. It is his first trip to China, or for a Canadian leader, in 8 years. And there's been a bit of a frosty relationship between Ottawa and Beijing since 2018, when Canada, at the behest of the United States, arrested the daughter and also executive Huawei, Meng Wanzhou. That set off a number of tit-for-tat retaliations from China. China essentially put tariffs on rapeseed oil, a key crop from Canada, which is also known as canola. That is something that Mark Carney will look to get some reprieve on. And also, of course, discussing EVs. China state media has talked about Canada needs to reduce its levies on Chinese goods, including aluminum and steel and electric vehicles.
And Steve, Mark Carney is not the only world leader to head to Beijing. Why is China rolling out the welcome mat to such a long list of leaders at the moment?
Sort of sounds obvious, right? Given what has happened with the tariffs in the United States, but also China has found new leverage in trade negotiations with the United States, also as punitive measures against Japan, and that is rare earths. So that is something that is critical to the EU. It's critical to a number of different partners or trading partners and leaders of those countries that are coming to Beijing. Of course, Anthony Albanese has made 2 trips to China in 2025. We had Emmanuel Macron of France be here last month in December. You saw the South Korean President Lee also visit earlier this month. Now we have Mark Carney. And then in the next coming days, we're going to have Keir Starmer of the UK coming to Beijing, followed by Friedrich Merz, the Chancellor of Germany. So clearly, these countries, including what Mark Carney said, looking to diversify their export destinations beyond just the United States, not just the United States, but including more to the world's second biggest economy, China. So yes, China sitting back and rolling out the welcoming mat.
All right, Chief North Asia correspondent Stephen Engel there. Well, the Trump administration has moved to set up a new process to secure access to imports of critical minerals. And this caps a months-long review to determine whether foreign shipments threaten U.S. national security. For more, let's get to our digital politics editor, Romy Varghese. Romy, so we've got this process. We've also, at the same time, actually got Scott Bessent here in Australia talking about critical mineral supply chains as well. But, you know, supply chains is one thing. Is the broader question here production? Is there just not enough of it?
Yes, this investigation makes it clear that critical minerals are important for national security. And this process lets lets the administration negotiate with foreign nations to make sure that the United States has access to these critical minerals that are important for advanced technology. You know, it's very interesting that Trump didn't immediately go to tariffs. He's setting up this process, setting up negotiations with foreign nations, but still keeping tariffs as a tool in his back pocket. So if these negotiations don't go well, if the United States feels that these negotiations are not moving in a timely fashion, then they can indeed levy tariffs to make sure that they have the critical minerals that they need for technologies.
Romy, the other thing that caught the attention pretty much in, 75 countries was how the U.S. is going to be issuing immigrant visas. This long list of countries, I mean, put things in perspective for us.
Yes, this is the latest in the Trump administration's restrictions on immigration. For this particular move, this is really targeting family-based immigration. It's not targeting visitors. It's targeting people who want to have permanent residency. So these are people who are spouses or children of people who already have U.S. citizenship. And the administration's rationale is that we don't want foreigners taking advantage of the U.S. public assistance benefits, but multiple studies have shown that immigrants actually use benefits less than U.S.-born Americans.
Romy, thanks so much. Our Bloomberg digital politics editor, Romy Varghese. Now, Danish Foreign Minister Lars Løkke Rasmussen says fundamental disagreement remains between his country and the U.S. over Greenland amid threats of a U.S. takeover. That warning came after high-level talks with the Trump administration. Our Copenhagen reporter, Sana Was, covered the meeting in Washington and joins us now. Sana, what was the tone of the meeting? What are these fundamental disagreements about?
Yeah, the Danish and Greenlandic foreign ministers, they met with Marco Rubio and J.D. Vance a few hours ago and came out afterwards overall very happy, but as you said fundamental disagreements still exist. and that is over whether or not Greenland should be part of the U.S. Trump still believes the U.S. needs to own Greenland, but they kind of just agreed to disagree. And I suppose the Danes then think that it actually went better than they feared. They felt the conversation was constructive, and they decided together to establish this working group, a high-level working group that will meet probably already within a few weeks to discuss a path forward. So that was better than feared. At least the spat between Denmark and the U.S. did not escalate, and that was what they had hoped for.
Sanna, of course, Denmark's a NATO ally, Greenland's friendly territory. Why is it not possible to reach some sort of negotiated agreement here without the U.S. just taking ownership?
Without the U.S., well, I mean, Greenland is part of the Danish kingdom today, but Greenlanders, they very much want independence, and they very much want to be their own nation and not to become a part of the U.S. So the key message from both the Greenlanders, but especially the Danes, is that it's not up to us to decide, and it's certainly not up to the U.S. or NATO to decide Greenland's future. That is for Greenlanders to decide, and their message has been very clear. We want to be our own state one day. For now, we choose Denmark, which is also a very interesting dynamic. The Greenlanders have almost become closer to Denmark in this whole spat, but a very clear rejection of the U.S. and of Donald Trump from the Greenlandic side.
All right, Bloomberg Copenhagen reporter Sanna Voss there. More ahead on the Asia trade. This is Bloomberg. The top global headlines that were following. President Trump has signaled he may hold off on attacking Iran for now after getting assurances that the government in Tehran would stop killing protesters. Trump says he was given that information from what he calls very important sources. The White House earlier confirmed the president had been briefed on a range of options for military strikes in Iran, including non-military sites.
The killing in Iran is stopping, and it's stopping. And there's no plan for executions or an execution or executions. So I've been told that on good authority.
China has instructed businesses not to use cybersecurity products from American and Israeli companies. That includes Palo Alto Networks, Fortinet, and Checkpoint Software. According to a government directive seen by Bloomberg, Chinese companies must replace products from these firms with domestic technologies by mid-year. Bloomberg's been told top Taiwanese officials are heading to Washington to push ahead on a long-stalled deal to lower U.S. tariffs. Sources say Taiwan's vice premier and top trade representative are expected to arrive as soon as today. It's unclear if a deal will be finalized, which U.S. officials will participate in the meetings, or whether President Trump will personally get involved. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how Asia futures are faring against the backdrop of that rotation underway in the U.S. out of tech stocks. Of course, we are also watching out for some of these tech earnings in Asia, including TSMC's later today. For the moment, you are seeing the Nikkei futures pointing to declines at the open, and we have been hearing as well jawboning for the Korean won, the Japanese yen, not just from local officials, but also the Treasury Secretary Scott Bessent. It's also about this Takaichi trade. And now we're hearing that officials from Japan's ruling bloc, they say Prime Minister Sanae Takaichi will call that snap election early in the parliamentary session starting later this month. And this has been seen as a gamble, maybe aimed at shoring up her leadership, securing a mandate for the new coalition. Let's go to Tokyo and bring in our East Asia government editor, John Herskovitz. John, talk to us about the key dates we need to watch and why she's calling an election now.
Sure. Takaichi is in a rare position. She actually has very strong personal approval ratings for her government, 60, 70, 80%. It doesn't happen that often in the career of any prime minister, and she wants to take advantage of this. The public is behind her. She is trying to end a couple of things. One is the ruling LDP, which has ruled Japan almost exclusively since the end of World War II, doesn't have a majority in either house of parliament. She sees this as an opening that could bring more votes to the LDP, get the majorities back in these houses of parliament to give it power again. The second thing that's going on is that Japan could be entering the period of revolving door prime ministers. Takaichi is the third prime minister, I think about 16 months or so. If she wins the election, gets the mandate, LDP stays in power, we get some certainty in the leadership of Japan. So the timing is there. It would be something, I think, February 8th or so, which could be the time for the election fairly soon. And the main opposition party has not really gained any ground in approval rating since Takaichi has come into power. So the things are lining up for her. It looks like now's the best time to strike as opposed to going on later, where it's really difficult to maintain these levels of support. So she sees the opening, and it looks like she's going to take advantage of it.
Yeah, well, John, of course, Sanae Takaichi, very popular. The LDP, though, less so. So there are some risks associated with this move, right?
Yeah, exactly. There are a few things that are going on. One is the old junior coalition partner, Komeito, is out of government. They were really good at the political machine, getting voters out to the poll. The new coalition partner, the Japan Innovation Party, is mostly an Osaka and city-based party, so they may not have the power to get the people out to the polls. So that's one risk. The other thing is that the problems that brought down the previous two prime ministers, worries about the inflation, cost of living, are still there, as well as money in politics. So these things are still there, and it's not as if Takaichi has changed the dynamics of what voters are really worried about. So this is another risk that confronts her. And the other thing is we have the economic risk. We've seen the yen weaken, bonds weaken. So while stocks have gone up, there are also some concerns in financial markets about her expansionary financial policy and what that could do for Japan's finances down the road.
Yeah, I think global debt investors are also watching this. Talk to us about the implications for the U.S. and other G7 countries as well.
Sure. I mean, Japan has gone into a period of uncertain political leadership. The previous Prime Minister, Ishiba, had to work with groups. The LDP didn't have a majority. He was at risk of losing policy directives because he had to bend to the other parties to get things done. With secure leadership in Japan, the U.S. will have a secure government in Asia. It's in this important region as it takes on China and also the likes of North Korea. It means that there's a certainty going down the road which could help the G7 in its initiatives, and also for the non-U.S. partners, having strong leadership in Japan could be a way that they could push back against some of the directives from the Trump administration, which have really, which has really impacted Europe and Japan, the trades and tariffs. So, it's we're going from a period of unstable leadership in Japan, and this could bring stability that could help quite a bit.
All right, Bloomberg East Asia Government Editor John Herskovitz there. The latest now from the corporate front. Honda plans to boost production of cheaper petrol-powered vehicles this year, a reflection of lower U.S. emission standards and a new car affordability crisis. Honda's head of U.S. sales says EVs will take a back seat in response to growing demand for low-cost models. American buyers are increasingly struggling to afford new cars that average almost $50,000 apiece. Dutch chipmaker Nexperia has alleged that its Chinese owner Wingtech pressured the company to transfer technology out of Europe and threatened executives. Wingtech has denied the claims, saying Nexperia was performing well before legal intervention. The Dutch court last year ordered Wingtech's shares in Nexperia to be placed under independent control and suspended the Dutch firm's Chinese CEO. OpenAI says it signed a multi-year deal to use hardware from Cerberus Systems for more computing power. While terms weren't disclosed, sources say the deal is worth $10 billion for access to 750 megawatts worth of computing power. The infrastructure will be built in multiple stages through 2028 and hosted by Cerberus.
Now to the latest on U.S. bank earnings, and Citigroup shares fell the most since October, despite results that beat expectations, as CEO Jane Fraser expressed caution on regulatory progress. She also warned that President Trump's push to cap credit card rates could slow U.S. economic growth.
Is not something that we can support. I think the reception from the Hill also seemed less than enthusiastic from what we could tell. And just to be clear, the impact to us and other banks would just be dwarfed by the severe impact on access to credit and on consumer spending across the country. These things just don't work out as intended.
Let's get to New York. Bring in finance reporter Catherine Doherty. Catherine, what accounted for the sell-off in Citigroup and other U.S. bank stocks?
So, as you noted earlier, it was really caution from the executives. Jane Fraser, CFO Mark Mason, they both expressed caution, trimmed the guidance on the firm's efficiency ratio. And this is after they were pressed by an analyst on their call today. The analyst was presuming that the company would be shedding its regulatory penalties this year, and that would be a boost for their overall earnings outlook. And the executives are stepping up and saying, not quite, take a step back. Fraser, the words that she used was, I wouldn't go as far as you. Now, this is on the backdrop, though, of the company's performance to end 2025. Bright spots, investment banking, outperforming analysts' expectations. These were up 84%, and this is having to do with advisory, the bank working on M&A, more deals as that's coming through. So that was really one of the bright spots for the company. And overall, trading across Wall Street has been an upbeat area for Bank of America, with equity traders outperforming expectations, boosting overall trading results. So it's really a tale of two cities. You have the expectations moving forward in 2026, dragging on the results from 2025.
Catherine, we also heard from, among all the other things with bank earnings, from Wells Fargo CFO weighing in on this idea of a cap on credit card fees. Let's just take a quick listen.
When you look at this idea, it will remove credit at a really important time from the people that most need it, and so there will be negative consequences across, of credit availability across the spectrum of credit card users.
There's the Wells Fargo CFO there. To what degree is this plan weighing on the bank's earnings, and what else have they had to say about it?
Well, it's certainly weighing on their share performance. You see a lot of skepticism, but in terms of the numbers, the actual earnings themselves, that remains to be seen. And all of the executives are responding to questions from the street and from journalists today, asking if this cap was to be put in place, this 10%, which is compared to an average of closer to 22%, what would that do to your overall profits? And the answer really was, we can't tell you at this time. Across all of the big U.S. banks that have held their calls and tried to answer and quell the fears, really it's the concerns and the caution that you're hearing, but not a lot of actual tangible numbers and analysis that they can do at this point. It's a lot of wait and see.
Amid the uncertainty, what else can we expect from the rest of the banks that are set to report?
So tomorrow we have Goldman Sachs and Morgan Stanley. They are the two large U.S. banks that still have yet to report their own earnings. And that's going to be all about core Wall Street operations, trading, investment banking. We're going to be listening for not just how the end of 2025 wrapped up, but looking ahead, what is the pipeline like so far? What we've heard from executives is that conversations are ongoing with corporates, which means M&A, IPOs are still very much coming forward, which could be boosting profits in not just how 2025 ended, but looking forward to the first, second, really through the end of 2026. Now, that is against the backdrop of an uncertain geopolitical environment. We have a lot of pressures, and every time that the Trump administration will make announcements such as the credit card fee caps that they are proposing, that's going to be a lot of maneuvering that these companies are going to have to do along the way. So while the guidance is very important, there's a lot of expectation that it's not something that is going to be easy to pull forward.
All right, Bloomberg's finance reporter Catherine Doherty there. Thanks so much. We have more ahead on the Asia trade. This is Bloomberg.
Now, when we talk about this rotation out of tech, one of the sectors that's garnered a lot of attention also are these Chinese healthcare stocks. They've started the year strongly. Indeed, Bernstein analysts call the sector a bright spot, noting that major healthcare and biotech indices are still below their 2023 post-COVID reopening highs. So they see this base for growth as looking pretty solid. If you look at the MSCI China, that is the sector that's been responsible for a lot of the gains already so far this year. The clear outperformer, the momentum is coming through on these Hong Kong publicly listed pharma names as well. They have been pushing higher into 2026, particularly the oncology players. Now, our next guest runs biotech firm BeOne Medicines, which develops cancer drugs. John Oyler is the chairman, CEO, and co-founder, and joins us now from San Francisco, where the JP Morgan Healthcare Conference is underway. John, really good to have you with us. Let's talk first about how 2025 was the first year you guys saw profitability. What is the next milestone for you?
Sure. Well, it's great to be part of things. It's exciting here at the JP Morgan conference. The weather's nice, the elevators are crowded, and the mood is very positive. For our company, the exciting things for this year, I think, are really moving forward are three foundational medicines in CLL, which I think are game-changing. And we've announced some advances in our solid tumor pipeline, where we've moved 5 assets into late-stage clinical development. So these are the exciting things for us this year.
How are you looking to leverage the roots that you have in the Chinese market to build up this business?
Look, I think that we're a company, we're about 12,000 people. We're very global. And we have had relationships with a number of companies in the U.S. and in Europe and in China. Right now, there's a great interest in some of the companies in China and doing business development deals there. Here at this meeting, it's a huge hub for BD. So we're meeting with all sorts of companies from all over the world and trying to find the best medicines wherever they may come from to potentially partner with and combine with our medicines to really try to fight cancer.
Of course, relations between the U.S. and China aren't terrific at the moment. How do you see, if at all, U.S.-China relations impacting your business, and how should firms such as yourself navigate the current environment?
Yeah, look, I think that we're trying to fight cancer, and we understand, countries, often are trying to pursue the things that are in their best interest, we get that. But fundamentally, to us, cancer is something that exists everywhere. We do think, hopefully, everyone can get together and align to set the right policy, the right rules, the right guardrails, so that we can be very successful in fighting cancer. When you develop a medicine, there's a lot of upfront investment in doing that to make sure that it's safe, that it's efficacious, that it's really going to help patients. And once that happens, we hope that there can continue to be a really productive global framework to get that medicine, constructively across the globe, everywhere.
You're in a very unique position. You've got listings in the US, Hong Kong, Shanghai as well. How do you view each of those capital markets right now?
The capital markets have been, kind to us, so we view them all very, very favorably. I think we, as a company that has medicine and clinical trials that are running everywhere across the globe, really do want to be able to access capital from everywhere and for people to know and understand our company. And, the markets have been kind to us this year, so we're very happy with them.
You spoke earlier about uniting for, businesses into this ecosystem with the right rules, the right guardrails. I wonder, what is your assessment of the Chinese ecosystem in terms of advantages for costs, for development timelines?
Look, I think that in terms of the ecosystem in general, there have been a number of things that have happened very positively over the last decade in China to help create revenue for innovative products and get them to more patients. And I think that's been, a new feature, and it's been very helpful to, all companies that are developing medicine. So I think that's been great policy from that perspective. In terms of, I may have lost the other half of the question, but I think that's a really good and powerful thing, which I think has been positive for the industry.
What is your sense of China perhaps taking leadership of the oncology industry compared to other global players?
Oncology is a really, really formidable disease and a formidable foe. And I think that we're needing everyone everywhere across the world to work together. I also think that, the real challenge is really running these very broad global clinical trials that enroll a lot of patients in Europe, in Latin America, in the Middle East, in the United States, in China, Japan, Korea, Australia. And from that perspective, it really takes a global infrastructure. It takes a global effort to understand, are these medicines going to be efficacious? Are they going to be broadly efficacious and safe in patients across the world? And that's what we're driving to do.
John, the JP Morgan Healthcare Conference has been described as a hotbed for deal making. Is that something in the works for your company?
We're meeting all sorts of companies, hoping that there can be, great situations where, two organizations working together can really have huge impact for patients. So lots of those meetings are happening. I hope that it comes to fruition and some things can happen. There's a ton of positivity here, as I said, and great weather and, frenetic motion. At the same time, I think people are saying, we'd like to see more deals. We'd like to see more deals. So we'll see what happens as the week plays out.
All right, John Oyler, Chairman and CEO of BeOne Medicines. Thanks so much for your time today. We have more ahead on the Asia Trade. This is Bloomberg.
Now, we have data out of Japan, the December PPI numbers. They're bang in line with estimates and higher by 2.4% on an on-year basis. On month, you're seeing that rise of 0.1%. But of course, the focus of late on dollar yen, and you see the reaction in the markets, has been the Takaichi trade. And against the backdrop, the jaw-boning verbally we've been getting, not just from local, but U.S. officials as well. Paul?
Let's take a look at how Kospi futures are tracking ahead of the open. Of course, last year was a stellar year for the index, and it's been a good year so far too. Futures pointing a little bit weaker, though, after we did see a rotation out of tech during the US session. The Nasdaq was down more than the Russell small caps index as well. We had some remarks also from Scott Bessent regards the weakness in the Korean won, which did put somewhat of a floor under the currency. It did gain 1% after Scott Bessent said the weakness in the won is not in line with Korea's fundamentals. Excessive volatility in FX markets undesirable, so really giving the green light to authorities to put a floor under the currency. Of course, we are getting the Bank of Korea rate decision out a little later on as well. Typically, we would expect that in about an hour's time. Not expecting to see any change there. It's likely to we'll get the rate holding at 2.5%. But Avril, looking ahead, you could possibly make a case for more easing. Inflation is seen falling in Korea, but we have seen recent job losses in construction and the manufacturing sectors as well. Retail sales, consumer confidence has also been pretty weak. So although we're not expecting a change, we do anticipate there'll be some interesting reading in the commentary. Let's put it that way.
Yeah, it's also interesting, I guess. There's been some that pointed out the remote possibility, maybe this year, given the way in which the Korean won weakness is figuring into import inflation. Should the conversation then be shifting towards a rate hike from the BOK? But as I said, remote possibility. And taking a look at what we're seeing in Japanese futures, I mean, we highlighted this just a short while ago. Is the stock market rally for Japanese equities running into a bit of a wall given the rotation that's come out of tech and into some of these value stocks? We talked a short while ago about healthcare related names, but financial also will be in focus. And given the politics that's at play for the moment and how the ruling coalition, these officials in Japan, they have been talking about Takaichi sort of confirming or set to announce this early election. U.S. futures pointing flat. We're watching the miners in Australia as well. Markets open in Seoul and Tokyo next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And Paul, overnight in the U.S., we saw that rotation out of tech, out of growth. Small caps, interestingly, did well. What does this mean for the Asia session, with a focus also on these currency moves and the verbal jawboning we've been getting, not just from local, but U.S. officials as well?
Yeah, Scott Bessent achieving a lot in a single post to X, right? Saying he didn't think those moves in Korean won were really justified based on the country's fundamentals, and successfully put a floor under the currency. Let's see how long it lasts, Avril.
Take a look at how Japan stocks are faring in the early goings. Of course, we've been hearing from these ruling coalition officials. They seem to be adding to the signs that we are headed indeed for an early election in Japan. But don't forget, this is seen as a sort of political gamble for Takaichi, given how, yes, popularity is running high based on opinion polls, but this is an untested dynamic, this ruling coalition, following on from not having the Komeito with them. So that's interesting to see as well. But given how we managed to see dollar-yen talk down, so to speak, from not just hawkish Ueda remarks, but perhaps also the help, their verbal intervention from Scott Bessent, talk down from the roughly 159 handle. Is that what is causing a bit of a headwind or a breather that we're seeing in Japanese equities against the backdrop of that rotation in the U.S. yields also in Japan, pulling away from the 2-2 handle on the the 10-year. Now, let's take a look at how South Korea is faring in the early parts of the session. It has been quite a monster rally. The complication, I guess, is the weakness that has been seen in the Korean won. Today, we also, to your point, have been hearing from Scott Bessent not liking some of these moves in the weakness in the Korean currency. You're still seeing the upward trajectory still on dollar Korea won around the weakest level since 2009 and the longest losing streak, I believe, since 2008. You're seeing that pullback in South Korea stocks as well. Not forgetting, bottom of this hour, we'll get the BOK decision. It's expected to leave rates unchanged, but the question is, will we get a further sense of where it sees growth and the rates trajectory for the rest of the year, especially given the specter of import inflation from the Korean won weakness? Paul.
Well, let's take a look at how US debt is trading in the Japanese session at the moment. We have seen a little bit of a pullback in yields. The 10-year now 4.13, so about 4 basis points lower than where it was this time yesterday. Now, the market really seeming to come to terms with the idea that there's not going to be much of a shift in the rate cut timetable from the Fed. The data just does not justify it, and Raphael Bostic really underscored that today when he made remarks saying inflation is still too high. So Fed independence alive and well, and a number of officials have continued to emphasize the importance of that. S&P futures a little bit softer. You did mention, Avril, we did see that rotation out of tech, small caps, the beneficiaries today. And crude prices retreating as well. New York crude off about 2% right now, slipping on remarks from President Trump saying he has been assured that the killing of protesters in Iran is stopping, which does reduce the odds of a military response. All right, let's get now to Jason Lui, head of APAC Equity and Derivative Strategy at BNP Paribas. Jason, thanks so much for joining us today. I do want to start with what we saw during the US session, this move out of tech, the NASDAQ having its worst day in a month, small caps doing pretty well. Do you see this as being a US-specific story, or could we expect to see a bit of a weakness in Asia tech stocks going ahead as well?
Sure. I think that's a great question. When it comes to rotation, we actually seen this started maybe towards late of last year within the US side, between tech and the non-tech. But even within tech, we have also seen some meaningful divergence as well. You may recall that if you look back at the tech rally last year, very often they tend to be a coordinated rally and a coordinated decline. But since perhaps November and December last year, where we see the success of Gemini, there's now a lot more debate about even within the tech complex, which AI model will be winning, and subsequently, which technology hardware that are driving those AI models will be winning. And so it resulted in a rather divergence among the Mac 7. And also, if you start this year, you also seen a divergence between the hardware semiconductor side of things versus the broader NASDAQ. And this also translates into Asia as well, because if you look at year to date, some of the best performing markets are Korea, Taiwan, and Japan, who tends to have a little bit more hardware exposure when it comes to the AI complex.
I noticed, Jason, missing from that list, you did not say China, but if we take a look at a chart that we have on the Bloomberg here, China AI has been finding a lot of new niches, in terms of medical self-diagnosis tools, short videos as well. We've seen a bit of strength in this space. Do you think there's better priced opportunities in the China AI story away from the US AI story?
I think that's a great question. The reason I did not mention China earlier is because when it comes to divergence, there's also the divergence between the China AI complex versus the rest of the world, which mostly driven by the US market. And the behavior tends to be quite different. So specifically on the China AI side, we are positive on this, especially with the anticipation of the 15th five-year plan that I believe investors are expecting more policy support. And from the recent IPOs over the past month and some of the outperformance of these AI-related names, it seems to suggest that there has been a structural change when it comes to how investors think about the competitiveness of China AI. But the way that they trade may have slightly deviated from the rest of the world because of the China ecosystem is not necessarily, at least at this point, connected with the US AI ecosystem.
What could potentially derail this? I think this, I guess, is a bit of a background concern, but we see how authorities onshore may be looking to curb some of the risks. You see the tightening of these margin financing ratios. Perhaps in the short term, longer term, what are you seeing as how this might impact the trajectory?
Sure. I think when we look at the China rally for over the past year or so, it actually started as a policy-driven rally or driven by the liquidity transfer from fixed income market or deposit into equity. It is true that we have also seen an increase of margin trading, but that is very much a reflection of investor getting more positive on the broader market. I think very often we have heard investor looking at the absolute level of the margin balance or the margin turnover. It is true that they are now in absolute terms near a record high, but we should also remember that the overall size of the Chinese equity market has also expanded quite significantly. So if you take the current margin balance outstanding as a percentage of the overall market cap, we are only about 60% of the previous peak that we saw back in 2015. And speaking of 2015, I believe that the policymakers have tried to learn from the experience of those leverage-driven market, and they're trying to cool down the market in order to encourage what they call the slow bull market, which is more based on long-term capital allocation rather than speculative flow on specific high-growth sectors.
That's a good point. Talk to us about structurally. I mean, we've been seeing data in the past day, exports growth in China still going really strong. We have yuan strength, maybe taking a bit of a breather for parts of this week. How does that all affect inflows into China, you think?
I think the inflow into China are quite divided because historically when investors look at inflow into China, they often start from the consumer angle. But for the past year or two, I think the consumer side remains quite weak. Or you have the so-called new consumption that are very specific to a handful of stocks or specific subsectors. Instead, I think we've seen a lot more focus on technology and on healthcare and high-end manufacturing that both of you mentioned at the earlier point. So, for example, in the Hong Kong market, we have seen a significant repricing of a lot of the foreign appetite into the technology-related stocks. But that level of optimism are not equally distributed across other sectors as well. So when it comes to foreign fund flow, we maintain the view that this year will be very targeted by the sectors and it will be very targeted by the different segments as well. Because when you look at the listing structure of the Hong Kong market and the China onshore market, they do offer very distinct exposure. For example, Hong Kong is more on the AI application, internet and software, whereas you can find a lot more hardware-oriented companies and high-end manufacturing in the China onshore market.
Jason, I know that one of the risks you see potentially in 2026 would be from a major change in Fed policy. There's certainly no evidence of that happening at the moment, but could you foresee a set of circumstances where that might change?
Sure. I think if you look at the Fed fund market right now, I think it's pricing in roughly 2 to 3 cut. But it is possible that as we enter into Q2, we'll be faced with a few unknowns. Number one, as we know now, there are quite a few legal cases around the Fed officials, Chair Powell and also Governor Lisa Cook. We also will likely start to see the implementation of the One Big Beautiful Bill, which will feed into the fiscal spending. And that could also translate into a potential recovery in the employment market, which feeds into the inflation. And at the same time, we will have a new Fed chair. So in Q2, I think there is a point that the market will be forced to recalibrate the interest rate trajectory based on the latest economic data. And I think that could drive either to a more dovish or hawkish tilt, and that will transmit to the rest of the world as well. So I think that is indeed a key event that we're watching in Q2.
You alluded to some of the potential risks for tech in particular. In terms of memory prices and demand, do you think there is a chance that the likes of South Korea markets, they sort of become a victim of their own success? Given how some of these big players are also flagging that that could affect growth in other parts of their business.
Mm-hmm. I think you're right that when we look at the memory price, we have seen a remarkable increase. I recall that during the fourth quarter, some of the memory module price has actually gone up 4 times, which drove the outperformance of the Korean tech stocks throughout Q4 and also at the start of this year. And that actually creates some very unique situation for the Asian tech or global tech, because markets like Korea and Taiwan, they do have a dominant position in a very specific segment. So Korea will be memory and storage, Taiwan will be foundries and AI servers. There are no clear replacement of these companies, and so they do have very strong pricing power. And in fact, I think we have seen early signs of the transmission of higher component price into end products. And I think we have seen a few companies raising their price on laptops and PC or smartphone to start the year. So I think if there is indeed a potential concern that if these prices continue to stay high, would that hurt demand? But I think specifically on the AI side of things, it seems that demand is still quite strong, and it's more of a supply constraint rather than a demand constraint. So I think on that part, perhaps it's less of a concern. And it is why, because of that very sharp increase in earnings expectation, it actually still makes Korean equity relatively cheap on a PE basis, because Kospi 200 right now trading around 10 times PE, and that is in line with its long-term average. And when you look at Taiwan, the TAIEX is also trading at about a 30% discount to the Nasdaq 100 as well. So in that sense, I think depending on the specific product, I think for certain part of the Asian market, they do have very strong pricing power that should feed into the earnings growth.
Jason, really good to get your insights. Thanks so much. Jason Lui is head of APEC Equity and Derivative Strategy at BNP Paribas. Now, we showed you earlier how Toyota Motors is faring, but the focus is squarely on Toyota Industries share prices. Take a look at how that surge has come through, given the Toyota Group upping its tender offer price to $18,800. This represents a 15% increase. So you're seeing that play out in Toyota Industries. Also in Japan, officials from Japan's ruling bloc say Prime Minister Sanae Takaichi will call a snap election early in the parliamentary session, starting later this month. It's a gamble aimed at shoring up her leadership and securing a mandate for the new coalition. Let's go to Tokyo and bring in economy and government reporter Yoshiaki Nohara. Yoshi, what's the latest on the election chatter?
So at least there's confirmation publicly from officials that this will happen. And it seems like she's going to give us a detailed schedule information on Monday. But everybody is in election mode now.
So Sanae Takaichi, very popular, but her LDP party not so popular. What's at risk here, or what are the stakes?
Paul, that's a really good point. The Prime Minister herself is very popular, and obviously she's trying to leverage that popularity to cement her power, more, deeply. But as you mentioned, that there's not much, rebounding support for the party, the Liberal Democratic Party itself. So the question is that how that gap is going to play out. Is that going to be, is the popularity of the Prime Minister is going to be able to cover everything that the ruling party has been suffering from, or the opposition parties are trying to scrutinize the gap and take advantage of that gap to win their influence?
How much of a political risk is it going to be for her, given the yen weakness we've been seeing of late?
Avril, so it's a tricky situation for the Prime Minister. As you mentioned, that the yen is very weak, and officials have been concerned about and giving verbal warnings about that. But at the same time, you have to realize that it's a weak yen that's also supporting stocks. And stocks have been rising to record high every single day. So it's a sensitive area that whether they want to use that intervention card to stem the weakness of the yen, which is going to hurt stocks to some degree. So it's a very tricky situation politically for her.
Yoshi, at the moment, information about this seems to be trickling out in a rather organic fashion. When are we going to hear some official announcements about what happens next and what does happen next if Japan's going to go to the polls?
Right. So on Monday, Prime Minister is likely to speak to the press, and in which she's going to give us detailed information about schedule, when the vote is going to be, and when the official campaign is going to start. And at the same time, she's going to use that as an opportunity to sell the why now part to the public. Why is she doing this now?
All right, Bloomberg economy and government reporter Yoshiaki Nahara there. Thank you. Well, Prime Minister Mark Carney has arrived in China on the first state visit by a Canadian leader in 8 years. He'll meet Premier Li today ahead of Friday talks with President Xi. Our chief North Asia correspondent Stephen Engel joins us now from Shanghai. So, Steve, what's at stake here for Mark Carney in China?
Well, clearly, Mark Carney, along with the other world leaders who are coming to China over the next couple of weeks and have already come in a lineup of, state guests. We'll get to that in just a minute. But Carney has not minced words. He's said he wants to essentially double over the next decade non-U.S. exports of Canadian goods. So where best to look? Perhaps across the Pacific to the world's second biggest economy, and that is China. But it's been a bit of a bumpy relationship between Canada and China over the last 7 years or so. If you date it back to the arrest by Canada at the behest of the United States of Huawei founder's daughter, who's also an executive, Meng Wanzhou, and then the arrest of a couple of Canadians, the two Michaels, as they're known colloquially here. And of course, there's been, since 2024, under the Prime Minister leadership of Justin Trudeau, was sort of a similar tact against China on tariffs, to align its trade policies with the Trump administration or the United States. Canada imposed tariffs on Chinese steel and aluminum, and also 100% tariffs on Chinese EVs. That is something the Chinese state media has singled out ahead of Mark Carney's visit when he arrived yesterday, and that is to implore Ottawa to sort of adopt a strategic autonomy stance from the United States in its trade policy. It's sort of, use your best judgment on trade policy. So clearly, China wants to see Canada repeal or dial back those tariffs on EVs and aluminum and steel. At the same time, Ottawa would like to see China dial back its trade action, its tariffs on rapeseed, which is also known as canola, a key crop of Canada's agricultural exports. So, yeah, there's a lot at stake. But again, this is what Mark Carney wants to do, to double non-U.S. exports over the next decade.
Well, of course, Carney hasn't been the only leader to head to Beijing. China has been rolling out this welcome mat for a number of leaders. What is the calculus for Beijing?
Well, I think it's very similar. I think the map of global trade is being currently redrawn right now. Not withdrawn, redrawn. And we saw that, obviously, with Albanese, the Australian Prime Minister. He made 2 trips to China last year. We have seen Emmanuel Macron of France come here last month. You had as well the President of South Korea making the first leader visit in the beginning part of this year, who wants to essentially fully restore relations between Seoul and Beijing. Then now you have Mark Carney, and in the next couple of days you're going to get the UK Prime Minister Keir Starmer, followed then by the German Chancellor Merz. And again, so yes, Beijing clearly is rolling out the red carpet. At the same time, they'd like to test the waters to see if they can garner some international support for their action against Japan, sort of freezing diplomatically. And also, again, a lot of these world leaders, including, of course, Merz of Germany and and the auto industry there. Some clarity on that new mechanism for a minimum price mechanism that will replace European tariffs on Chinese EVs. Lots to discuss there, but also lots to discuss on China's newfound leverage on rare earths, which they employed in negotiations with the United States and is now using that leverage to punish Japan. So much to talk about, but the world leaders are lining up to come to Beijing and at least talk about boosting trade.
Allies and adversaries. Stephen, great to chat. Thanks so much for providing this context for us. Chief North Asia correspondent Stephen Angle. We have more ahead on the Asia trade. This is Bloomberg.
President Trump has signaled he may hold off on attacking Iran for now after getting assurances that the government in Tehran would stop killing protesters. Trump says he was given that information from what he calls very important sources. The White House earlier confirmed the president had been briefed on a range of options for military strikes in Iran, including non-military sites.
The killing in Iran is stopping, and it's stopped, and it's stopping. And there's no plan for executions or executions. So I've been told that a good authority.
Well, let's take a look at how the oil price has been reacting to that. A little bit of a pullback there. New York crude now just below $61 a barrel on the expectation that maybe the situation is cooling off, but it does remain volatile. Oil traders certainly bracing for more volatility ahead, Avril.
Paul, here are some other global stories we've been tracking. At least 32 were killed and dozens more injured when a crane collapsed onto a moving train on Wednesday in northeastern Thailand. About 64 people were injured and needed hospital treatment. The crane was being used to build a high-speed rail line that will link Thailand with China via Laos under Beijing's Belt and Road Initiative. Bloomberg's been told top Taiwanese officials are heading to Washington to push ahead on a long-stalled deal to lower U.S. tariffs. Sources say Taiwan's vice premier and top trade representative are expected to arrive as soon as today. It's unclear if a deal will be finalized, which U.S. officials will participate in the meetings. A couple of unknowns. We'll track that story. This is Bloomberg.
Let's take a look at how we're tracking here in Asia on the key markets, seeing a little bit of weakness for the Nikkei after a number of days of impressive gains. If we take a look at the sector-specific story, we do have financials continuing to show some reasonable strength, up about 0.4%. This is despite the gap between deposits and loans at Japanese banks narrowing to its lowest level in nearly 4 years. The Kospi kind of flat at the moment. Here in Australia, we're pushing higher to the tune of 0.4%. We did see some moves in the Japanese and Korean currencies as well, particularly in the case of the won. Scott Bessent making some remarks which help put a floor under that, and we are of course counting down to the Bank of Korea decision, due to get that, well, anytime soon. Not expecting any change there, but we'll be closely watching the commentary. Well, investors are also awaiting TSMC's earnings later on Thursday. The stock's been on a blistering rally powered by the AI boom. The world's largest contract chip maker has surged to record highs, deterring short sellers and leaving both bulls and bears struggling to make fresh bets on the stock. Let's get to our Asia equities reporter Charlotte Yang now for more. Charlotte, what are we expecting to hear today from TSMC, and is it going to give us any more clarity on the likely direction of travel for the stock price?
Yeah, so looking at market positioning, expectation is running pretty high for TSMC to deliver a strong set of earnings as well as some upbeat guidance. So the chip maker has already reported that its December quarter sales has grew about 20%, and now consensus estimates are expecting a record quarterly profit as well as gross margin at around 61%. That's the highest in 3 years level, driven by strong AI spending as well as high utilization rate. But I think what matters more for where the stock will go from here is what the company is going to say about the outlook for this year. Consensus are expecting $46 billion for capital expenditure this year. So if we get around that level or above that, I think that will show to investors that the company, the chip maker, is very upbeat about the outlook for those advanced AI chips, and that would also that money will also be able to help them build up those capacity. And what's also investors are watching are what the company is going to say about the memory chip shortages, given that it's weighing on so much of the clients and also has a ripple effect for the broader semiconductor supply chain.
Charlotte, we've been seeing overall investors looking quite bullish on TSMC, but to Paul's point earlier, I guess they're finding it difficult to place bets, whether they're bulls or bears. What are you seeing, and are they coming up with some creative solutions to work around this?
Yeah, so TSMC's blistering rally, which has further lifted, its index weight, has actually sort of kept, investors, no matter you're on the bullish side or the bearish side, in a bind. So the stock is now, accounts for nearly 12% on some of those regional MSCI Asia indexes, and in Taiwan it accounts nearly 44% of index weight. But many fund managers, they have this limit of how much they can hold for a single stock at 10%. And we have data that shows the stock is already held by a record number of active EM funds and at a record rate of 9.5%. So what this means is that this is making a lot of investors really vulnerable to underperformance. So investors are, and given this challenge, investors are becoming pretty innovative of different ways to bet on the stock when you cannot outright bet against or bet on the stock. So for example, in Taiwan, you're seeing this largest active ETF actually buying two passive ETFs that has more weight on TSMC because they've already reached their 10% single stock weight limit. In other cases, we also see investors turning to structured products if they're a bit more cautious about the stock, but they also want to have those limited upside. And also equity, over-the-counter equity swap fees, financing fees are rising according to sources because of the demand to long TSMC. So I think it's such an interesting case, but it also shows you, I think at this moment, because of how much the stock is owned, it's a little bit difficult for both bulls and bears to bet against the stock.
You spoke earlier about how you'll be watching very closely the guidance. I mean, this is a shining example of a company that's been successful in Asia's AI boom. What else do you think could perhaps derail the expectations? Can it continue doing so?
Yes, so far I think from the analyst comments and the channel checks we get, the demand for AI is still going very strong. So I think fundamental-wise, there's not too much questions about TSMC. But I think if you're looking at on the investing on the money side, back to the point we just mentioned about how crowded the positioning on TSMC is, and a lot of investors also are actually hiking their weight on, for example, SK Hynix and those memory chip beneficiaries to balance of that underperformance from TSMC. So I think because of it's so a crowded positioning, and if you're invested, you're still bullish on AI, you might be turning to the other place on the supply chain instead of just outright owning the stock. But with that said, I think what the comments today from TSMC is just holding this, broad implications for the broader supply chains in Asia, and it's much bigger than for TSMC.
Charlotte, fantastic. So interesting how investors have been finding trouble positioning amid all this. Bloomberg's Asia equities reporter Charlotte Yang. And tomorrow on the Asia Trade, we'll hear from TSMC Senior Vice President and CFO Wendell Huang on the company's earnings and business outlook. For the moment, here are some other top corporate stories we're tracking. Honda plans to boost production of cheaper petrol-powered vehicles this year, a reflection of lower U.S. emission standards and a new car affordability crisis. Honda's head of U.S. sales says EVs will take a back seat in response to growing demand for low-cost models. American buyers are increasingly struggling to afford new cars that average almost $50,000 apiece. OpenAI says it signed a multi-year deal to use hardware from Cerebras Systems for more computing power. While terms weren't disclosed, sources say the deal is worth $10 billion for access to 750 megawatts worth of computing power. The infrastructure will be built in multiple stages through 2028 and hosted by Cerebras. Dutch chipmaker Nexperia has alleged that its Chinese owner WingTech pressured the company to transfer technology out of Europe and threatened executives. WingTech has denied the claim, saying Nexperia was performing well before legal intervention. A Dutch court last year ordered WingTech shares in Nexperia to be placed under independent control and suspended the Dutch firm's Chinese CEO. Paul?
Let's take a look at how US futures are tracking at the moment. All a little bit softer across the board. It was an interesting day for US markets. A couple of key themes. We saw a rotation out of tech, futures indicating that we might expect to see that trend continuing. Small caps Russell Index had a pretty good day. S&P futures off by about 0.1%. Bank earnings, a bit of a mixed bag, really. We did have Bank of America beating, but Wells Fargo missed on severance costs. We had Citi also beating estimates for the fourth quarter, but then some questions later on about meeting regulatory requirements and cutting costs as well. So perhaps a repricing of earnings qualities among banks, and that's weighing across futures for US markets at the moment. A Republican Senator Tom Tillis says President Trump is getting bad advice from his advisors, including on his pursuit of Greenland, and there's no support in Congress for such a takeover. Tillis also told us he has doubts about Trump's claim that Iran has ended its deadly assault on protesters.
This is a murderous regime that never stops killing. It's just a matter of how many, not whether or not they're pursuing it. So I'm very skeptical that something overnight could have actually occurred to have gotten from thousands to zero. Just doesn't make sense to me.
Pretty remarkable. You had a speech on the floor of the Senate the other day in which you said that you are sick of stupid. Made a headline in the Washington Post, and you were talking in that speech about the people around the president, not Donald Trump himself. Is he getting bad advice?
I think the president is. I've enjoyed a good relationship with the president. It's probably different from other members. I'm very direct. Look, I spent 20 years in top-tier management consulting. I spent 20 years in legislative politics. I like to think that I can help look around corners. I see advice here that's not taking care of the president's best interest. The Greenland position is a good example. We need people to make sure the president has a fully weighted set of criteria before he moves forward on some of these policies. I see no path where his aspiration for Greenland occurs unless it's a negotiation and something far short of what he has in mind.
We talked to Senator Chris Coons at this time last evening, who I know is taking part in a bipartisan codel to Denmark with you and others. He was strident in his language, making it clear that NATO is at stake. Is that where we are?
No. I think we're going to get into a little bit of hyperbolic language here. Chris is a friend of mine. He's a Democrat. I could see where he's may take that position. But I've been the Republican leader of the Senate NATO Observer Group since 2018.
Yes.
I'm going there to reassure everyone that unlike what angered me last week was one of the president's advisors making the statement that it was the position of the U.S. government that Greenland would become a part of the United States. He doesn't have an election certificate. He is not a member of the Article 1 branch. I am. It can be his position. It can currently be the position of the president. But the people, the people in Denmark, the NATO countries, our allies, our partners, the people who have gone to war with us, fought side by side with us, lost lives when they came to Afghanistan, and consistent with their Article 5 commitment in NATO, I want to make them very aware of the fact that there is not support for this in Congress, regardless of what they may say in the White House. I think that an illegal taking of another territory and from a sovereign nation and a member of NATO is just not good advice. And I'm going there to tell them there's at least one branch of government that stands with the NATO alliance.
Republican Senator Tom Tillis speaking with Balance of Power co-anchor Joe Matthew. Now, subscribers can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions we talk about and become part of the conversation by sending us instant messages. Check it out at TV Go. More ahead on the Asia trade. This is Bloomberg.
Let's take a look at how U.S. Treasuries are tracking in the Tokyo session at the moment. We have seen yields across the board moving a little bit lower. Most of the action we've been focused on has been at the shorter end as we look ahead to what the Fed might do. But we've seen long end yields sliding as well as investors look for havens. We've got the 30-year yield now at the lowest level so far this year amid haven demand. And yields across multiple durations were lower by the end of Wednesday. I mean, we've also got a situation where the U.S. Federal Reserve not in any rush to ease. We heard from Raphael Bostic a little bit earlier as well, saying inflation still top of mind for him, and that follows on from John Williams' comments earlier this week that rates are in a pretty good place at the moment. So, Avril, looks like Fed independence for now, alive and well, and yields across the curve softer.
Yeah, I mean, when you talk about safe havens, we've been seeing this monster rally in precious metals as well. That's just extended this week. But with these comments from the Fed officials, it does feel a bit more difficult to be a dollar bear. Certainly, that was some of the points made by our colleagues earlier in the show. Take a look, though, at, despite all this, what we're seeing on the Korean won, because that weakness is still coming through despite that verbal intervention we've been seeing from Korean officials. They're perhaps looking to the National Pension Service in terms of trying to sustain the rebound on the Korean won. We are hearing as well on how the BOK is set to meet with some of these lenders tomorrow, but the standout amid all this has been this tweet from the Treasury Secretary of the U.S. He talked about how he met with the South Korean Deputy Prime Minister to discuss critical minerals, right? He's kind of been meeting with some of these Asian officials, including, I think, his Australian counterpart, talking about the supply chain, talking about materials there. But interestingly, also, of course, how he has talked about this issue of the Korean won weakness. That's something that he has been sharing in terms of commentary with not just the Korean side of things, but also in Japan when he spoke to Katayama-san. So certainly the weakness in these North Asia currencies is drawing attention from U.S. officials as well. Now let's bring in Goohoon Kwon, Senior Asia Economist at Goldman Sachs. Goohoon, of course, we are watching out for the BOK decision, not expected to move. We've been seeing growth pretty firm. Maybe the BOK's focus has gone beyond the stability in the housing market. But what are you watching out for today against the backdrop of this weakness in the currency?
Yeah, we expect the Bank of Korea to keep the policy rate on hold because of the concerns about the extreme volatility of Korean won and also some consideration on housing market. But when you look at the fundamentals like GDP growth and the inflation, etc., I think it's fully justify another cut. But for now, I think they will on hold.
What is the sense you're getting on the policy options for the BOK or finance authorities in South Korea, given the slide we've been seeing in the won?
The driver of the Korean won weakness is not like Japan, where the rate differential matters a lot. But in the case of Korea, I think 2.5% is sufficiently high. And as we predict, if Fed continue to cut at least twice this year, then the rate differential will go down to like 1%. So that's very small rate differential. The reason why Korean weakened so much, actually since October last year, was because of huge outbound flows from Korean retails and also sustained outbound flows from Social Security fund in Korea, which is one of the largest in the world. So, but that can be handled relatively easily relative to foreigners selling stocks. But at the end of the day, when you look at the KOSPI, Korean equity market, and Korean one going the other way, and this cannot deviate for too long, for too far.
Yeah, in terms of the direction of travel for the won, those remarks from the US Treasury, Scott Bessent, did put a floor under things. The won actually gained 1% after that. But longer term, what do you see needs to happen to stabilize the currency? And if we do get more easing from the Bank of Korea, not today, but later on this year, do you see more weakness ahead?
Well, we cannot agree with Bessent more on his view on Korean won, as you mentioned at the beginning. We think that I think we are one of the most bullish house on Korean won. We expect the Korean won go down to below the 1,400 on a 12-month horizon, given the very strong fundamentals and also favorable cyclical tailwind, especially on falling oil price and rising chip prices, as well as a very strong Korean equity markets.
Of course, South Korea earlier this year, in terms of appeasing the United States when it comes to trade, pledged some very large-scale investments in the US. Do you feel that that has had much of an impact on depressing the won?
Probably at the beginning of that talks, a lot of investors were concerned about the large amount of upfront cash payment to U.S., which could weaken currency. But in the end, the annual amount was kept at $20 billion, which is almost same as interest and the dividend income of Bank of Korea. We don't think that's material, but to the extent that the U.S. also understand that it is in the interest of the U.S. and as well as the reason that Korea remains stable after the trade and investment deal. We don't think that's a huge issue. We think the government is focusing on local fund outbound flows, which there are some room for correcting the regulatory arbitrage as well as tax arbitrages, which government can handle. We feel confident that dollar Korean will go down very quickly going forward, despite one more rate cut, which we still expect to happen.
Yeah, possible one more cut this year, but in the meantime, as expected, we're seeing the BOK leaving that policy rate unchanged at 2.5%. What are the factors you think that need to come into play for us to actually see that rate cut down the road, Goohoon?
The first thing, obviously, is the housing market, further progress in housing market stabilization. I think they are in the good start now because of measures. Housing transaction fell, and then also lending to household went down quite a bit. But I think Bank of Korea want to take a bit, want to see the more further progress. At the end of the day, the most important thing when they consider about the further cut will be FX stability. And given the enormous, the concerted effort by the Korean government as well as the support from the U.S. on Korean won stability, we feel confident that within 3 months horizon, dollar Korean won will stabilize in a way to allow Bank of Korea to cut the rate.
You talk about this dynamic between the BOK and the government. It's interesting, the government does seem a bit more optimistic about the growth outlook for this year than the BOK. I mean, based on what we heard in the past couple of weeks, what is your sense on the spectrum on the growth outlook for this year, given how there are these concerns about that K-shaped economy that has been emerging? You talked about chips earlier. How much of a problem is this potentially going to be?
Yeah, this upcycle is very different from any previous cycles we ever seen. This is driven by AI boom and very concentrated on AI-related sectors. And the rest of the economy, manufacturing, is under pressure from Chinese overcapacity or competitiveness of Chinese. So when you see even within manufacturing side, even export side, huge divergence. It's not unique to Korea, also Taiwan the same, right? So that K-shaped recovery poses challenges to policy the consideration, especially for central bank, because aggregate number looks better because of very strong the growth coming from the AI sectors, but the rest of the economy is not doing well. In a way, very difficult for Bank of Korea to even thinking about hike despite 2% growth which we expect, and probably the agreement that 2% is possible. But when you look at underneath of the growth, there is huge polarization across sectors, across also between export and domestic demand. In a way, very difficult for them to even considering hike.
All right, Goohoon Kwon, Senior Asia Economist at Goldman Sachs. Thanks for joining us to help us unpack that Bank of Korea decision staying on hold as expected at 2.5%. More ahead on the Asia trade. This is Bloomberg.
Quick look at Greater China futures on a day where there's been a rotation out of tech following the performance on Wall Street. We're watching TSMC earnings. That's on deck today for the moment. Also, perhaps investors a bit more cautious given how just a day ago those Chinese investors or exchanges, I should say, came through in order to curb risks, those tighter margin financing ratios. So we actually saw that playing out in the session, and Chinese stocks paired those gains. Looks like for now, Hang Seng futures are pointing to further declines at the open. That's it from the Asia trade. Our markets coverage continues. This is Bloomberg.